Hi class, this video is going to be the first of a series of two videos that runs through balance day adjustments. Balance day adjustments in our Macmillan textbook are primarily discussed in chapter 18, but you have been exposed to these throughout your journey of Unit 3 and Unit 4 accounting. You probably just didn't know that they were balance day adjustments. What are we going to do today? By the end of this video, I hope you are able to achieve the learning intention that you are able to understand the need for a balance day adjustment, and you also particularly know what a prepaid expense is, which is primarily the focus of this video. By the end of this video and by the end of your study, I hope that you are able to explain the need for these balance day adjustments, and importantly, you can record in general journals and ledgers everything you need to know or do for a prepaid expense. But what is a balance day adjustment? Before we go to it, it's now probably a good time to take a step back and think about how much you've learnt of accounting in Year 12, and particularly the accounting process. You might be amazed at how much you've developed in your knowledge across these number of months. So how does the accounting process that we keep building complexity in work? First off, as you know, we have source documents to meet the verifiability qualitative characteristic, and this provides the information for transactions that get recorded in the general journal where we start our double entry debits and credits. From our journals, we go to ledgers. And from our ledgers, we then are able to make a pre-adjustment trial balance, a listing of all of our general ledger accounts and have a look to think about what their balance is in terms of debits and credits. And you're seeing a word there where you probably never even cared too much about, this word of adjustment. This is relevant now because after a pre-adjustment trial balance, we then do now balance day adjustments, and we'll discuss what that is in a second. From this balance day adjustment, we then get a post-adjustment trial balance, the most accurate of trial balances. Once we are really confident in our debits and credits and our numbers, it's then and only then we make reports, and we are experts at making three particular reports: income statements, balance sheets, cash flow statements. Now, one that we haven't talked about too much, but we have always thought about, from then to earn the big bucks as an accountant and to be a trusted advisor and to help a business grow and develop, we then also give advice. But what are these balance day adjustments? A balance day adjustment is how we follow a very important accounting assumption called the accrual accounting assumption. This determines profit by using an important formula: net profit does not equal revenue minus expenses, but importantly, revenue earned less expenses incurred. The balance day adjustment are all the adjustments we make to revenue and expense accounts. So important, these will generally just impact revenue and expense accounts, or impact them and then something else at the end of our period to make sure they equal the revenue earned and expenses incurred. This includes prepaid and accrued expenses, which is the focus of chapter 18. But what I really want you to be thinking is a balance day adjustment. All it is an adjustment on the balance day, the day we're about to make our reports, to make our numbers more accurate, to make our numbers reflect the revenue earned and the expenses incurred. Now you have done, but you might not have known the balance day adjustments, lots of these already. What are some of the things that you do on a balance day to make your reports more accurate? Have a think, but what are some of these? These are things like inventory gain, inventory loss, any correcting error that you make, any record of depreciation, and lots more. We're now just going to give you some specific ones that you will definitely see in exams and SACs. And the first one and the focus of this video is prepaid expenses. A prepaid expense involves when an expense is paid in advance and not consumed. It is therefore not an expense, as the original payment is a current asset. And you might have seen these before, you should have. Some examples are prepaid rent or prepaid insurance. They could be anything. These are things that are typically expenses, rent and insurance, but you often pay things in advance. So you might pay for 12 months of insurance in the future, or rent for the next 6 months. Now, you have not consumed all of that rent. In fact, you've consumed none of it when you pay it. So it's actually an asset, because now you control the building that you now have paid for. You now have a control of insurance that will cover you for 12 months. Why is it a current asset? Because you're only going to have control of this thing from less than 12 months. But we need to understand that we need to make an adjustment for the consumption of this prepaid expense on the balance date. So we have recorded a current asset, but we need to understand we need to do an adjustment on the balance day for the expense that has incurred during the reporting period. We need to adjust the ledger accounts to do something, but we are ultimately recognizing that some of that asset that was prepaid on rent or insurance, we have now consumed from the time that we paid it up until the time now that is our balance day. So what are the adjustments we need to do? We need to adjust our ledger accounts to recognize the amount consumed, because this is transferred to our expenses. The amount consumed becomes an expense. And we need to ensure the prepaid expense, the asset, only shows what is remaining that we control in the future, because it's only that is the asset, and we need to understand some of this expense has been incurred in this period. So what are the steps for the consumption of a prepaid expense? Always follow this and you can't really go wrong. Number one, we need to work out how much the expense is per month. So you often will pay rent for 6 months and it might be a value. How much of that is per month? And then we need to work out how many months have occurred from the payment to the balance day. Let's look at an example. On March 1st, 2015, so an old example, but it's still perfectly valid, Dom's Large Good paid $6,000 plus $600 of GST to cover the next 6 months of rent. The firm closes its ledger accounts and prepares reports on 30th of June each year. So on 1st of March 2015, we're going to record a prepaid expense of $6,000 for prepaid rent. Cash going down, our credit, prepaid rent, our asset going up, a debit. We need to think about how much is this expense per month. Now that's a relatively simple concept because we've paid for $6,000 for 6 months rent. So that means we have $1,000 per month. The hard part is to work out how many months have occurred from our payment to our balance date. And our balance day is the day we do our reports, so it is the 30th of June. 1st of March to the 30th of June, be really careful, is actually 4 months. All of March, all of April, all of May, and all of June. So, how many months have occurred? 4 months. So that means we have $4,000 of rent that we have used up in this period. We need to adjust for that. So let's look at another example and think about it in the terms of debits and credits. In this example, we are going to use July 2020, and the business has taken out a yearly insurance premium on the 1st of July, paying $1,300.20 of cash, which includes GST of $120. Their reporting period concludes on 31st of December each year. How would I record this when I first paid for this? Like so. I have prepaid insurance. I have paid for the next years of insurance, so it is a whole an asset at the moment. Assets going up is a debit, and this asset is prepaid insurance of $1,200 because there is GST. The GST is a payment, so it's reduced my liability, so also a debit of 120. And the amount of cash that I've paid is 1,320. Cash going down being a credit. A narration is often required in one of these. It's important to mention some keywords here. The main word here is this word advance. You've paid it in advance, and this is why it's an asset. How do we then record the adjustment? How much of the insurance expense was incurred in the year ended 31 December 2020? If we think this through, the insurance paid in advance was $1,200 and it was for 12 months. So we can do an easy calculation, 1,200 divided by 12, to say that the insurance expense is actually $100 per month. How much insurance has occurred from the 1st of July to the 31st of December? You'd do really careful to do to not make a mistake. You would realize that's been 6 months. All of July, all of August, all of September, all of October, all of November, all of December. Half of a year has been consumed, so $600 has been consumed. So on the balance day, the expense incurred must be transferred from the asset to the expense account. And we would do this like so. I'm going to record for the first time an insurance expense. Expenses going up are debits. And if you think about it, this is the first time we've recorded insurance expenses in this period. So if we didn't do this adjustment, we would have no insurance as an expense reported in our income statement, which would overstate our profit. We are also then going to reduce our current asset. Only half of our prepaid insurance is now an asset, so assets going down are credits. Some sort of narration saying adjusting entry for 6-month insurance is perfect. It is a balance day adjustment, so remember a good narration will probably start with the word adjusting. So then we need to think about how this would look in our ledgers. We need to think about how our expense ledger, insured expense, would look, and our asset ledger, prepaid insurance, would look. The prepaid insurance is an asset account, so it's balanced, and it would look like this. On July 1, it went up by $1,200, debits being left, and it went up because we paid cash. And December 31, it is $600 as a credit, reducing our asset because it is gone down. And the other reason was because we recorded the other part of the transaction, the debit of insurance. We would then go through the process of balancing it, and we would see on January 1, we are reporting $600 of a balance of an asset. The insurance expense is closed off to P&L summary, as it should because it's an expense account, and it will look like this. We've recorded $600 of expenses, and we've transferred that to P&L summary to determine profit. How do we then report all of our remaining prepaid expenses in the balance sheet? As some of the prepaid expenses not being used up, we do still need to report our asset, and this is reported in our current assets on the balance day, and ours would look simply like this. We have a current asset of prepaid insurance expense. So you might start to see more items in your balance sheet under current assets. When the prepaid insurance is used up fully in the next period, it is likely that this will no longer be part of an asset, and we would have $600 more of expenses in the next period. And we would keep doing balance day adjustments each period on the balance day. And guys, that is how we record prepaid expenses. Now's the time to practice it. Build your understanding of balance day adjustment because it's an important part of the course and one that you will definitely see in the exam in some way, shape or form. Keep practicing your accounting.